Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Friday, August 28, 2009. The euro-dollar pair slid in today's trading following another test of resistance near the 1.4390 area. The pair fell 90 pips to 1.4290 as U.S. stocks sank in late New York trading. That reversed the gains seen in the pair following yesterday's rally as a result of higher New York stocks in late trading yesterday. That keeps the pair within its recent triangle pattern with upward sloping support near the 1.4260 to 1.4270 area. The euro-yen fell in favor of the yen today, conforming to its descending triangle pattern in the pair. It reversed part of the gains in the pair from yesterday. News from Japan was weak, though overnight the euro had climbed higher. The last 2 weeks of August are usually accompanied by low liquidity, as many traders in countries in Europe especially are on vacation. Therefore, we have seen consolidation, with price action lacking any conviction. Next week, though, is full of important releases and could break this indecision, especially as several currencies, like this one, approach the intersection of support and resistance trend lines. Data from Japan showed the country's unemployment rate climbed to 5.7% in July, which is the highest level on record. Higher unemployment will hamper the strength of any recovery as consumer spending is curtailed. Household spending for the month of June was down 2% on the year, a worse than expected figure and one that breaks 2 months of small increases. In the U.S., personal income and spending numbers were also weaker than expected for the July period. Incomes were flat, while spending rose a smaller than expected 0.2%. The increase in spending was mainly a result of the Cash for Clunkers program, as spending excluding cars was flat. A second report from the U.S. showed that the final version of consumer sentiment dipped to 65.7 in August from 66 in July, but that was still much higher than the preliminary reading of this UMich index that happened in the middle of the month that had the index falling to 63.2. The dollar-yen remained mired in rather low volatility trading, rising overnight but falling in New York trading. That returns the pair to its more comfortable role of decreasing in times of risk aversion. We're in the midst of a bit of a downward channel in the pair with support at 93.40. The US dollar Canadian dollar, which fell overnight in favor of the loonie, paired its losses and rallied to trade above 1.09 in late New York trading on the back of declining stocks. This pair has been rather volatile this week, but it too is beginning to resemble some squeezing action. In news from Canada, the central bank there plans to sell up to $2 billion worth of US dollar bonds to boost its foreign exchange reserves and support lending by the International Monetary Fund. It doesn't seem, though, that this announcement had a major impact on the markets. In a final pair, we see that the pound dollar bounced down off resistance after testing 1.6380. The pound has been under heavy pressure recently, but it did see a counter rally to its recent down move in yesterday's session and overnight today. On Wednesday, the pair had broken below an upward sloping line of support, and now that trend line switched its role and acted as resistance. For the week, the pair is down about 250 pips. Next week, we have a slew of important fundamental releases, including services and manufacturing data from the US and UK, interest rate decisions from Australia and the European Central Bank, and of course, Friday's always important non-farm payroll report. And that concludes this week's coverage of the Forex market. Thank you for joining us here at CMSFX.com, and from all of us here at CMS Forex, have a great weekend.